Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from London, this is Bloomberg Technology. Coming up, full market coverage ahead as stocks whipsaw after GDP data calms the AI rout. Plus, we turn to the micro picture and sit down with the CEO of ServiceNow on earnings. And we talk venture funding with the CEO of startup Vanta as it raises $150 million with the help of Sequoia Capital. We check in on what was an enormous sell-off yesterday. $760 billion in market capitalization was erased from the Magnificent Seven on Wednesday, a total wipeout. In fact, we saw basically $1 trillion wiped off the NASDAQ 100 more broadly. But today, maybe some signs of calm creep back into the market. We bounce off our lows. We're actually in the green on the major benchmarks, all after what seems to be a Goldilocks reading on GDP. I'm pleased to say for more is Isabel Lee, who can deep dive into what is driving this market. Before it was all AI anxiety, and now it seems to be more about GDP not as bad as we had worried about.
Exactly. We have stocks stabilizing today. We have GDP data that showed that U.S. growth grew faster than expected, which really just implies that the economy is holding up despite elevated interest rates. But I want to bring it back to yesterday, Caroline, because it was a huge reality check. We saw a lot of superlatives. The S&P 500 and the NASDAQ 100 saw their worst days since 2022. And I'd like to think that the tip of the iceberg was really the lukewarm start to the earnings seasons. We have Alphabet with bloated capex, Tesla again postponing the robo-taxi, and investors got thinking, when will we see the ROI of these AI investments? AI, yes, is revolutionary, and it really drove the market to beat one record after the other, but it's not going to happen overnight, and I think that's what they're slowly coming to realize.
It's interesting that we've actually had some decent numbers coming out of, well, ServiceNow we're going to dig into a moment. So there is generative AI revenue in certain areas. But the key question has been valuations, right? There are some great quotes in the stories today just being that valuations just became, well, absurd.
Definitely, and this is why yesterday I was just with a PM and he was like, he's not investing in Tesla and NVIDIA actually, but he likes the rest of the Magnificent Seven or the Magnificent Five, so to speak. So it really just again highlights how this is a stock picker's market, because it's not anymore track the benchmark and see gains. You have to be more nuanced in how you pick. And of course, each portfolio manager has different levels of tolerance. They have different levels of entry points, but traders are now really hedging themselves against wild swings. We have, for example, options volatility in NVIDIA. It's now rising to the highest level since mid-March, and even premium puts for Broadcom also at 3 months high. So investors are kind of more risk off. They're more cautious in how to approach this, because what goes up will not always go up. It will eventually come down, and really that's what we're seeing. But also, we have to note that we only saw 2. There are 5 more to go. Microsoft is scheduled to report on July 30. We have Meta, Apple, Amazon after that, and NVIDIA, of course, on August 28th. So it's still a wait and see for now. I think it's too early to declare that this is the end of the rally so far.
But maybe there are other options, and the options seem to be small caps. Isabel, can you just talk our tech-focused audience around a rotation that is happening in the broader markets?
Exactly. So there has been a rotation in rally for the whole first half of the year. It's been the mega cap tech companies that really brought the market higher. But now small caps are shining. We saw a huge rotation beginning actually when there were the softer reports of the CPI, and we saw small caps starting to shine. And that's really going to be a huge sector to watch out for, because as the Fed cuts rates, and now it's looking to be September, although Bill Dudley, a former New York Fed president, called for in June, which is like July rather, which is like next week. Small caps stand to benefit, and they're really outperforming for the 10th time in 11 days their larger cap tech peers. And a factor of that is the U.S. presidential elections. We know that if we see lower taxes, they will stand to benefit. So again, AI is not the only sector anymore. We see other parts of the market now shining, so to speak.
Volumes, they're higher today, and for now, so are the benchmarks, but only just. Bloomberg's Isabel Lee, we really appreciate the deep dive. Now let's get you a micro picture. ServiceNow actually managing to push away some of the AI anxiety itself by reporting better than expected second quarter earnings on Wednesday after the bell. increased sales, bookings up. The company also reported, though, that the president, CJ Desai, will be resigning after a probe into the hiring of an ex-CIO of the U.S. Army, Raj Iyer, who had also since left the company. I broke it all down with the ServiceNow CEO, Bill McDermott, just moments ago. Take a listen.
I've been blessed with 25,000 of the greatest women, men I've ever worked with, and they just every day come to work for our customers. And, you know, we built this AI platform for business transformation. And in this moment in time, CEOs need to grow their businesses, and they can't do it unless they simplify their organizations. They're very complex, and you have to clean up the mess to serve your customers and your employees and your innovators better. And they're doing it on one common platform with ServiceNow, powered by Gen AI. And the Gen AI revolution is real for ServiceNow because we built it into our platform. And we have something we call domain-specific LLMs, which means we work with the customer's data. We have zero latency in terms of speed because it's the customer's data, and it's highly secure because it's the customer's data. So we're able to innovate and build net new innovation constantly, and we're constantly releasing this innovation to the market, and that's why our Gen AI business is doubling quarter after quarter, and we're beating and raising guidance, and no one else is doing it. So it's a real thrill.
Let's talk about, and I hate to name names, but some other enterprise software companies. I mean, Salesforce, Workday, they're teaming up to be offering generative AI products. Are you worried about that?
It's perfect. I mean, if you think about it, it's what I just said. They both have, let's call it departmental solutions. You know, one might be focused on the customer, one might be focused on HR, and they have an architecture that's been around decades now. So we use the data in those systems for customers so they can activate this new brave Gen AI world on the ServiceNow platform. Because what good does it do for a CEO to have the sales director optimized, but they are not included in a workflow that deals with the customer from the product that you build to the product that you ship, and ultimately the product that the customer uses and gets satisfaction from. We take the whole value chain into account. If you take HR, you know, it's one thing to have a system of record where, you know, I know my employees and I pay them and I have benefits for them, but it's another thing to recruit them, hire them, onboard them, train them, give them every service that they need in real time, and constantly evolve the generative AI use cases on the mobile so they have a beautiful life. So we just do something different. They do something important too, and our job is to make sure that the customer wins.
Are you taking market share?
Oh, obviously. I mean, if you look at our business, we are the unicorn in the enterprise software industry. I think that one of the analysts on Wall Street put it beautifully today. He basically said that this is an exclusive brand in the enterprise software industry because we're the unicorn. No one's growing as fast as we are. You know, they say you're world class when you grow at the rule of 40. That means your revenue growth plus your free cash flow margin adds up to 40. We're operating in the mid-50s. And we're not only beating quarters, but we're raising guidance as we beat quarters. And that's really because the Gen AI revolution was carefully thought through on our platform. Our brilliant engineers built the best products in the world. Our go-to-market machine's unstoppable. And all the supporting functions in our company and our ecosystem are working for the customer. We come to work for the customer. Whether you're in the private sector or you're in the public sector, we work for you. And I think people really appreciate that, which is why we have like a 99% loyalty rate.
I want to talk about that public sector, and indeed some of the analysts noting a slight nervousness about what's just happened that's unique to you, and this is in the hiring sphere. And in fact, the president and COO, CJ Desai, has just left the company largely because of policy violations, we understand. You did a deep dive into what had occurred in terms of the hiring of your head of public sector, Raj Iyer, the former U.S. Army official. Now, for those out there who don't know legalese, who aren't aware of HR details, can you explain really simply what happened and the action you took?
Well, I can tell you what I told the capital markets yesterday. Basically, we received an internal complaint. We take all complaints extremely seriously, especially when it comes to a public sector entity. We love our federal business, and we care deeply about the citizens of the United States and also the service professionals of the United States and how we serve them. We take that extremely seriously. So we elevated that to the board. A special committee of the board was formed along with outside counsel. We investigated all the facts very, very carefully and came to the conclusion that our policy was violated. And we openly reported this to all the entities that are the entities that should have received the reports in the government. And we were proactive with the whole situation. So we have that behind us, hopefully. And, you know, it's one of those things where integrity and our abidance by strict adherence to our policies is just something that we care deeply about in our culture, and we don't grade that on a curve. You know, tough decisions have to be made when tough decisions have to be made.
Bill McDermott, CEO of ServiceNow there. Let's continue the conversation with Bloomberg's Brody Ford. You broke down the numbers yesterday. You looked into, of course, that hiring and ill-timed hiring, it would seem, who had been the head of the Army in terms of digital transformation. What do you make of that? What's the market making of it?
Yeah, I mean, so the person who departed, CJ Desai, he was a big deal, right? I mean, this was probably the number 2 person in the company, probably the one who spoke to investors most often at capital markets days, things like that. He was thought of as their product leader. You know, usually when a sales leader departs abruptly, that's a little more riveting to investors in the immediate because that can mean short-term disruption in sales. When a product leader departs, that might mean more of a long-term disruption in roadmap. So a lot of investors I was hearing from were concerned, but they were more excited about some of the good revenue numbers they saw. So, I mean, maybe the CJ departure was not the greatest thing, but it clearly, the stock's up 13% today. It was not enough to ruffle the sentiment too broadly.
Yeah, Morgan Stanley saying, look, does not expect disruptions, but it was surprising. But they are saying that the strength was broad-based across product verticals, geographies. Gen AI momentum is building. Is Gen AI momentum unique to ServiceNow, or are we seeing it on other software plays like IBM?
Yeah, and I mean, that momentum, I think, for most vendors is still a slightly open question. ServiceNow spoke heavily about Gen AI helping to fuel the big deals. We didn't get a super clean number about, hey, it contributed this much. During a capital markets day earlier this year, they said it's going to take a while to uplift the top line, right? So it's maybe helping get people excited about the software in general. Is Gen AI alone contributing a lot? It's hard to say. IBM, as you said, they're largely a consulting company. So yeah, I mean, consulting at this point, all the big companies are going to consultants saying, God, can you help me figure out what I should be buying here? And that's great news for IBM that has a $2 billion book of business in Gen AI at this point.
Yeah, they were specific. They gave a number,
yeah,
and they broke it down as to largely that is consulting, but that might shift in terms of the overall percentage differences when we were speaking to the CEO just yesterday. Anything else jump out from IBM briefly, Brody?
Yeah, from IBM, I think the question is, as you laid out, as a consultant right now, most of those Gen AI revenues are in consulting. Over time, does it go to software? Are they able to say to their clients, look, some of the best software you should implement is ding, 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 IBM. And then over time, they continue to use it, and it helps grow in software. Or are they just going to go and use OpenAI models like many others have? That's, I think, what a lot of investors are watching for.
Brody Ford, you have been a busy man. We appreciate you coming on. Thank you so much. Meanwhile, as we head to break, we've been talking about some individual stock movers. Let's look at the broader market. We are being topsy-turvied by the GDP figure. Look, we were down hard yesterday on the NASDAQ. We're managing to claw our way back slightly. We're still off by 2.25% over the last 4 trading days. Remember, massive wipeout of market cap to the tune of $1 trillion yesterday. How much can we push back as GDP comes in looking stronger than expected? This is Bloomberg Technology. Let's talk about the world of crypto. Billionaire Michael Novogratz, Galaxy Asset Management that he has, of course, the unit has just raised $113 million for a venture fund. investing in early-stage startups focused on, you guessed it, crypto software, as well as infrastructure and financial applications. The fund expects to continue fundraising to reach a $150 million target next year at the latest. I want to talk about animal spirits in the world of crypto, how tied they are to perhaps a sell-off in big tech. Kavita Gupta's with us, Delta Blockchain Fund General Partner. And Kavita, I want to just go more broadly to what Bitcoin and ETH are up to at the moment, because they have been dragged lower as market sentiment soured. How much is this an alternative asset class? How much ultimately is it still tied very much to equities, to the yen?
I think this market is very interesting because we are continuously seeing a lot of inflows and a lot of outflows. Like ETH ETF got approved, and we saw even on first day a huge amount of money coming into ETH ETFs, around 170 million, which was proposed. But at the same time, we saw Grayscale ETH ETF Trust actually having an outflow of 800 million. At the same time, we saw Mt. Gox, amazing big billion-dollar amount of money getting released. We saw German government selling their Bitcoin because these are the Bitcoins which were locked when they were priced $100 to $500, and suddenly you are getting them at 65, 64K. So the outflows right now within the space are getting more than the inflows, and that's why we are seeing a lot of volatility in the prices, both for Bitcoin, ETH, and the altcoin rallies, which actually did take off, has sort of plummeted because of the crunch of liquidity too. And as you open the news about different funds raising money in the space, we are also seeing that a lot of them are keeping their fund open to keep on raising because there is not much liquidity in the space, both for equities or for liquid tokens. So it's been interesting.
What about institutional adoption within this? I mean, when people are fundraising, looking to back startups, where is the LP money coming from? Is it the same sort of institutions that have been backing the future of ETFs, the more broad adoption of crypto as an asset class?
I think at different places in the public market, you have more institutions. In the VC platforms, you are seeing lot bigger fund of funds and bigger institutions like pension funds, university endowments, really coming in multi-billion-dollar funds. But at the same time, in a mid-level fund or small like ours, we are seeing a lot of individuals and individuals like HNIs and big family offices from Middle East, Latin America, India, really jumping on the ground with it. So we are seeing more and more adoption and openness after the ETF approvals.
Very global in its adoption, as you were talking about. But let's bring it back to the United States. How much is there election risk? I mean, we're about to hear Trump speak at a blockchain event, a Bitcoin event on the weekend.
Yes, I mean, it's fascinating, right? The President Trump is coming and speaking in Nashville. There were rumors that Vice President Kamala Harris may show up. I think President Trump has really got there and called himself a crypto president, which definitely has given a huge legitimate eyes to this whole crypto ecosystem, which 10 years back was very speculative, considered very, very risky. But what I'm excited about personally is to see whether Vice President Kamala Harris, what's her views about crypto, because we really don't know. It's a fresh slate. And so that's something I'm excited about over the next 2 weeks to hear. Is this going to be a continuation of White House or no?
Kavita Gupta, great to have some time with you. Delta Blockchain Fund General Partner. We appreciate it. Roblox. Well, it's widely seen as the internet's biggest recreation zone for kids. But is it really safe? As the platform is fighting to keep predators away, a Bloomberg investigation reveals it's not always winning. A message of warning. Some viewers may find the subject matter disturbing.
Social media platforms, gaming platforms, all internet companies have struggled with X-rated content and trying to protect kids or prevent them from being access to it. What's different about this story and this reporting is that we're seeing examples of these cases shifting from the online world into the offline world, where kids are being physically kidnapped, abducted, and sexually assaulted by predators who have connected with them on Roblox.
I've seen so many horrible things happen on Roblox. I've seen games that fully simulate sex with penetration, with fluids. There's been predators who have traveled to meet kids in real life. There's been predators who have transported children hundreds of miles away to their homes.
Roblox has around 77 million daily users, and more than 40% of them are under the age of 13.
Anytime you have an audience where it's mostly kids, predators are going to be in there looking for victims to procure.
Who's ever seen a room full of people laying around in their underpants, like their avatars?
Some really full-on things are happening to kids, and it's subtle the way it starts.
What do you remember him saying to you that was bad?
I remember he would make jokes like, you know, the younger they are, the tighter the hole.
There's predators that will pay children with Robux to do sex acts on camera. And all of this is happening while at the same time Roblox is branding their platform as safe for children.
We've got to start thinking about how we do Roblox differently. It's like going to a place rather than playing a game.
You can view the full documentary at Bloomberg.com. We want to dive deeper into one of the authors of this investigation, Bloomberg's Cecilia de Anastasio. Cecilia, incredibly important work that you've done. And some of the statistics are just horrific. Since 2018, police in the US have arrested at least 24 people accused of abducting or abusing victims they'd met or groomed using Roblox. How is this happening? How is the grooming coming offline? And what is Roblox seemingly doing about it?
Sure. Over 30 million kids under 13 log on to Roblox every day. Parents know it, Roblox knows it, and according to our research, predators know it too. It takes a minute or less to sign up for a Roblox account, and unlike other social media platforms, Roblox allows anyone of any age to sign in. Also, unless parents go into safety settings, kids who log into Roblox are able to chat with anybody, any stranger. So we were interested in understanding exactly how predators were abusing children using Roblox, and we filed dozens of Freedom of Information requests for police documents that explained how predators were doing this. And, you know, some do communicate over those open chats. Others might entice kids into abusive acts using the Robux currency. One pattern we noticed was that some predators would meet kids over Roblox and then move them to another platform like Discord.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in London. So let's get more on this market sell-off and, well, where you should be playing it. Nancy Tengler of Laffer Tengler Investments is with us. And it's so good to have your voice on the show today, Nancy. I want to go first to the macro picture. This rotation, this move to small caps, this idea that maybe we've been too hyped in AI valuations. Are you buying it?
Hi, Caroline. Thanks so much for having me. I don't think so. And I could easily be wrong. But if you go back and look at small caps, they tend to be a trade more than an investment. And I just went back and looked at performance of the IWM for 10 years and 20 years. And the 20-year, which is when a period when you had really low interest rates, you had growth, they lagged the large cap index, S&P 500, by 250%. And over the 10 years, they were about half of the S&P 500. So I think if you expect interest rates to come down dramatically and quickly for all the right reasons, that will benefit small cap names. But I just don't think that's the case. I think we'll see a slow decline in interest rates. Many of these companies are highly levered. Their earnings are not great. And generally speaking, in either index. And so I think for now, if you think the economy is slowing, you want to stick with names like ServiceNow that have delivered consistent mid-20% growth for the last 3 years.
Before we dig into ServiceNow, I just want to stay on the macro ideal. And we were speaking with the NASDAQ CEO just a little bit earlier on the show. Adina Freeman joined to talk about whether we're being affected in animal spirits by broader macro policy. Just take a listen for a moment.
The monetary policy outlook and other geopolitical, factors, I think, are still keeping investors a little bit more risk they have a little bit more risk aversion. But we're seeing some real good progress, and we think that going into 2025, we should see more momentum in terms of the pipeline of companies that we've been talking to.
She's talking about IPO pipeline, but from your perspective, do you agree that people are still risk averse at the moment, or actually it doesn't feel like that when we're near all record highs on the benchmarks?
No, agreed. But also remember that we still have about $6 trillion in cash on the sidelines. So I think definitely investors are hedging and their bets on where we're going. We think we're in the early days or the early innings of a new bull market that began in October of 2022, driven by technology and generative AI, which we think is sustainable and will drive productivity. If you look at productivity in the U.S. minus rest of world, what you see is that we've hit a 25-year high, and productivity drives earnings, earnings drive stock prices. So from a macro standpoint, the GDP number would indicate that we're really not slowing, but let's just assume that we're slowing. That's always going to be good for risk assets that can generate reliable earnings growth. So I don't know. The data is so mixed, Caroline, and then it gets revised dramatically. So I think you just have to look at the company level, and that's where you get the best information.
Let's go company level. Let's go to what Bill McDermott was just telling me over at ServiceNow. And I know you're a big fan of Bill's and have been in this stock and committed to it, Nancy. What I was hearing from him is, look, our generative AI pipeline is doubling quarter on quarter because of their new optionality and way in which that you can be organizing your workflow from a generative AI perspective. They signed, I think it was 70 deals in Q1. They've now doubled that, they're saying, overall, more than doubled that in the Q2. And just listen to Bill for a moment on ultimately how real the generative AI hype is. Take a listen.
In some cases it is. And a lot of people are whitewashing AI and pretending that they've got something. Ask to see the demo, show me the product, show me the use cases. Do you know my industry? Do you know my business? Is there a use case there? And how can I turn that into productivity and real value add from my stakeholders to improve the way my company runs? There's a lot of pretenders out there, Caroline. We're not one of them. We're a winner.
Well, today his stock is a winner, Nancy. Who are the pretenders? Who are the real winners in your mind's eye?
Well, I think, and proving why he's such a great CEO, he's also a great salesman. I'm buying. Listen, in our 12 Best Ideas portfolio where we do own ServiceNow, we also think that Microsoft is a winner. That may seem super obvious, but they are a leader and they're going to integrate and already have integrated generative AI throughout the product offering. I think that the chip names, that the usual suspects, I've always talked on your show, we own the poor man's Broadcom, which thankfully we trimmed pretty dramatically before the sell-off. But I think they're a winner. I think Dell's a winner. And then I think just application-wise, you can look across software providers. Adobe's probably a winner. But I do think that the CRM Workday joint venture, and I heard your interview, it was excellent, is indicative of the fact that they feel threatened by ServiceNow's penetration into both of their business lines, and they're doing it seamlessly. So they do need to join together, and I think that will be interesting. We exited CRM because we're not convinced they are a winner.
Nancy, it's always good to get your clear line of thinking. We so appreciate it. Nancy Tengler of Laffer Tengler Investments on where the winners and the losers are right now. Meanwhile, time for Talking Tech. First up, let's talk about Alibaba making another AI deal. The e-commerce giant has participated in new financing for $691 million Chinese startup Baichuan, now valued at $2.8 billion. Founded in 2023, Baichuan is a leader in the generative AI space in China, and that's as one of the first firms to win government approval for a public rollout. Plus, NVIDIA partner Sustainable Metal Cloud is raising $950 million in new funds. Now, the Singapore data center upstart is finalizing an initial equity round of $400 million alongside raising $550 million in debt, according to sources. Now, the company hopes to spur growth by tapping into, guess what, the global AI boom as companies seek computing capacity. And fintech firm Revolut says it's received its UK banking license in a move that could challenge traditional banks like Barclays and HSBC. In a statement, Revolut says the license was authorized by the Prudential Regulation Authority, but comes with some restrictions for the time being. Revolut will now move to mobilization, it says, the phase for new UK banks. Coming up, we're going to be joined by Allraise CEO Paige Hendricks-Buckner for the firm's annual report on what it tells us of the investing landscape for women founders and VCs. Stick with us. This is Bloomberg Technology. Women and non-binary venture investors have gained a foothold in the tech industry 5 years faster than a key advocacy group that's always expected. Still, leaders say that this national backlash to diversity, equality and inclusion initiatives is now threatening the progress that has been made. Let's bring in Allraise CEO, Paige Hendricks-Bergner, for more. This report has, the highs and lows. Let's focus on the highs first of all. Because we are seeing more female non-binary decision makers, check writers in VC than perhaps you anticipated.
That's exactly right. And Caroline, it's so great to be with you today. So Allraise is an organization that has been committed to propelling the success of women and non-binary investors, founders, and operators since the very beginning. And what's really exciting is we've seen progress, as you said. We've seen a doubling, so from 9% to 17.4% when it comes to the number of women decision makers in VC firms. And for the amount of funding going to women founders at the earliest stages, we initially started tracking and saw it was only 11%. And so now we're excited to see that it's up to 27%. So like you said, big opportunity here and exciting growth.
Meanwhile, though, the pendulum has swung on a DEI perspective. Whether or not it's action or people just aren't talking about DEI in the same way, how is it affecting the amount of women non-binary being invited to write checks, being invited to join incredibly popular VC superstars when we're thinking about, say, the latest AI company that everyone wants to invest in?
Hey, look, our community members are out investing. And what we also know is that firms who are part of the Allraise community know that diverse firms get better returns. And it's exciting because if you look at the data, what you discover is that of all of the firms in the top quartile, 69% of them had women decision makers at the table. And so what's exciting is that the data's there. We just need to continue to talk about that story because it's not being told. I think the second part that I want to bring up to you, Caroline, that really excites me is that when you look at venture capital firms who increase their hiring of women partners by just 10%, they see an on average spike of 1.5% in overall fund returns each year, and they had 9.7% more profitable exits. So I think there's a really big opportunity for us to not just talk about the data, but also tell the stories of the check writers who are making this happen. And we have so many of them in our community.
Of course, all of this comes in the context that it's been a really hard environment for venture in the last year or so. And I'm interested as to whether or not we are seeing more diverse VCs, ultimately meaning we're backing more diverse founders, and whether they are coming in the world of artificial intelligence. Bloomberg, for example, just shone a light on what they see as some of the 10 must-have VC companies at the moment in AI, but none of them were run by women or diverse founders.
Yeah, so actually what's really interesting when you look at the PitchBook data is that some of the biggest funds that were raised by companies with women-led teams. So we are seeing women at the top of AI teams, and I think there's an opportunity for us to continue to grow in that space. That's actually one of the reasons why we're so excited about talking about the people in our community who are making investments in AI and who are experts in AI. So you're going to see us continue to tell more of those stories. The second part that I want to bring up as well is that when we look at diversity on the founder side of the equation, we know that we have to diversify who writes checks as well. And there's some really great research that says female partners invest in 2 times more female founding teams at the earliest stages. So there's a great opportunity for us to continue to lean into diversifying teams so that we see diverse companies in places like AI and healthcare and education and more.
Love the data you bring.
We love data here
on all of it. Thank you, Paige, for bringing it. Paige Hendricks-Bergner, Allraise CEO. Great to have you on the show and around the latest report. Meanwhile, let's talk to a female founder now, because leading trust management platform Vanta recently raised $150 million in a Series C funding round, sending the company's valuation at $2.45 billion. The company plans to use this funding in part to work more in, you guessed it, artificial intelligence. I'm pleased to welcome Vanta CEO, Christina Cassiopo. Thank you so much for joining us, Christina. Look, you raise money. The idea is to what? Put money into artificial intelligence and basically making what? More safe, trusting abilities for the companies that you serve. Why is AI going to help? How are you going to invest in it?
Yeah, we're very excited to take this new money and invest in new products and experiences for our customers. So a big part of what Vanta does is replace manual GRC and risk processes and help the teams running those at companies take advantage of all of the information within their companies, but synthesize it into something they can action and understand and act on. And when you think about what AI and LLMs are really good at, it's basically that, right? It's taking a bunch of information in one format, synthesizing it, and putting it in another. So about a year ago, we started making some really heavy AI investments at Vanta. We've already shipped a few products to customers that they're really enjoying and finding beneficial. And we're really excited that the new funding allows us to kind of double and triple down here.
What does that investment look like? Is it people? Is it talent? Is it compute? What is it that you need to invest in?
Yeah, it's a great question. It is mostly people. And I think it's for us, and I think this is true when I talk to other founders of AI startups in San Francisco, it's a combination of engineers. And, I think we talk a lot about, the AI engineer and the rise of that. Again, it's also subject matter experts. And so for us, it's security professionals, it's risk professionals, compliance professionals who know the domain really well. And then it's that pairing of engineer and subject matter expert that really helps us build great experiences for our customers.
Christina, boy, you were founded in 2018, all after basically some high-profile data breaches. Data breaches keep happening. Doesn't AT&T know it? I'm really interested as to how you're finding your product market fit just continuing in this current environment.
We are, and I think the data breaches that keep happening, like you're talking about, there's a lot of skepticism around the world about AI. There's also a lot of optimism. But I think what we see is overall tech companies can be seen as less trustworthy today than they were 10 years ago, 15 years ago. And Vanta was really founded to help tech companies sort of restore some of that trust in a real way, right? And what we help our companies and customers do with trust management is implement best security practices and then demonstrate to their customers. And so customers can take more kind of assurance and trust that, the software they're using is built in as trustworthy and reliable a way as possible.
Christina, it's been great speaking with you. Thank you so much, Christina Cassiopo, CEO of Vanta. Congratulations on the funding round. Come back as you continue that investment. Let's go to another European stock on the downside. Universal Music Group shares fell as much as 30%. The decline in streaming revenue, marking the biggest decline since the company's IPO in 2021. Now, the weaker sales were largely attributed to slowdowns in advertising growth at Spotify and YouTube and barriers with social media platforms like TikTok, Facebook. Meanwhile, we're sticking the world of streaming, not music, but sport. NBA announcing long-term TV contracts with Disney, Comcast and Amazon, ending the league's nearly 40-year-long contract with Warner Brothers after the media giant was unable to match Amazon's offer. The new contract is expected to generate $76 billion in fees. It's going to begin in the fall of next year. Randall Williams, I'm pleased to say, joins us for more. This was a real tussle up until the last minute.
Absolutely. Warner Brothers Discovery waited until the last minute. They had an exclusive negotiating period where they had an opportunity to be a partner, and they couldn't match a price, so they waited for Amazon or NBC or whoever they'd wanted to match, and evidently they tried Amazon. The NBA said no yesterday, and rather quickly, too.
And for what reason? I mean, obviously money talks, but they must be thinking that there's a viewership addition here. There's a marketing, the branding expertise that they're going to be able to bring.
Yeah, the NBA gave me 3 reasons, and I want to make sure I get them right. But number one is that TNT, when they matched the offer, they wanted to stream all the games on its cable network and its streaming service, Max, whereas Amazon is just a full-fledged streaming service. Second, the NBA believes that Amazon's reach is greater. And number 3, Amazon offered to pay the first 3 years of its deal up front, while Warner Brothers Discovery came in and tried to get a line of credit. And so the league, when it reached out to its new partners, they wanted a streamer, and they got one in Amazon.
Wanted a cash buyer, no mortgages, thanks, no loans. I'm interested, just very briefly, what does this mean for Amazon? What does this mean in terms of other sports rights?
Well, their sports empire grows. Obviously, they have stuff with the NFL where they have Thursday Night Football. Now they have the NBA. They have a lot of docuseries as well. And so this is the beginning of a new era for Amazon. They're going to have an NFL playoff game. They're going to have NBA playoff games. If you want to watch the 2 biggest media sports deals, you're going to have Amazon.
Randall Williams, telling it straight. We so appreciate it.
Thank
you so much.
Thank you for having me.
Now, that does it from this edition of Bloomberg Technology from here in London. You do not want to forget to digest it all. Our CEO interviews, the earnings, the questioning of AI hype. Go to it on our podcast. You can find it on the terminal, as well as online on Apple, Spotify, iHeart, wherever you stream. From London, this is Bloomberg Technology.